Emilio, thank you very much for joining me today, especially that it's a Comic-Con weekend in San Diego, and I had to pull you in to talk about one of the hottest topics that happened last week in insurance or InsurTech, which is the Vesttoo ordeal, right? So all the information that we're going to talk about today, everything is public information, it's rolling news. The newspapers are providing more and more information as we go. So this is based on what we know today, which is the 23rd of July. So hi, how are you doing? Thank you very much for joining me today.
Thank you for having me. Happy Sunday. Happy to miss Comic-Con, honestly. It's been a little humid here in San Diego, so happy to be inside in the AC.
I'm sure. Well, the Comic-Con, it's part a joke, part for your teenage kids. So let's keep it there and move to the professional side of today's, let's call it, hot topic. Let's do a quick podcast and talk about this very interesting problem and all the things behind it. So can you say, before we start in dealing with this ordeal, let's talk about your company, Indemnity Lab. What is it?
So Indemnity Lab is a strategy as a service company that was just launched about 3 months ago. It's been in the forefront of my mind for about 1.5 years now. And what I've seen after mentoring and advising numerous startups and different MGAs or program managers and reinsurance and carriers is on the startup side mainly, and the newer MGAs as well. They tend to take your advice, your mentorship in the first 3 years, and after that, they believe through osmosis that they've gained all your knowledge. And then they'll go to the next shiny mentor, advisor, etc. So what I've done with Indemnity Lab is we've created a think tank, and this think tank is comprised of currently 18, 19 different C-level insurance executives, all experts in their respective fields, whether it's reinsurance, whether it's underwriting, claims, operations, marketing, communications, etc. Brought them into Indemnity Lab, and we will be providing this service to private equity and venture capital firms for their portfolio companies. So we'll be doing them on a one-off basis, on a per company basis, and we'll analyze their current strategy and recommend a different strategy for success. These companies are amazing at engagement. They're amazing at having technology. But what we want to do is show them the legacy mentality behind insurance and how they can lower their loss ratios, how they can lower their combined ratios, how they can increase their underwriting profitability, and then hence as well their investment portfolios.
So just quickly iterating on that. So basically, you gathered C-level, high-level executives in the insurance industry, brought them together as strategists, and you're selling those services, the think tank service and the power of analytics and decades of experience to PEs and VCs, mainly to understand better their portfolio companies, their InsurTech, their startups or MGAs that are part of their portfolio. They don't need to be, do they need to be a startup, or they can be any insurance company?
Initially, we're going to be working with startups and MGAs. And as we evolve, we're looking at working with reinsurers that have program business, that want to help their portfolios. We'll work with carriers. We'll work with anyone. But initially, it'll be startups for the first 6 to 9 months, roughly. Think of this as, these companies build ships that are very agile and very quick, but they don't know how to steer them. For us, we'll bring in the expertise to show them how to steer the ship properly, when you go against the wind, when you go with the wind, etc.
And that comes instead of from the, let's call it the ship captain, actually it's something that as a service from the investors or the chief harbor, no, it's not a harbor master, whoever invested in those companies. Okay,
Absolutely.
So I assume that the cost of it, and I'm sure that in the future you'll talk about it with customers, that you get a think tank of executives for the cost of an analyst or something like that. Well,
you get
a year analyst.
You get 19 highly experienced, 30 plus years executives each for the price of one full-time employee on an annualized basis. and we will help guide that ship for you.
Okay, this is super interesting. I'm sure more to come, especially as people prepare for InsurTech Connect in November. But let's go back and talk about the news and this really hot topic that's been, everyone is tapped into hear more and more about this rolling news. And of course, we'll know once the official audit, if they will ever air, and we'll know really what happened there. What do we know so far about what's going on with Vesttoo and the Corinthian Group?
Well, the latest and greatest that we've heard, and mind you, this is all hearsay news. It's just news. It's third-party news that we're listening to. We haven't had any documentation that shows any of this. So this is just obviously between us and your audience. There have been some fraudulent letters of credit that have been posted by Vesttoo from China Construction Bank. There was an investor that went to collect on an LOC from the New York branch of China Construction Bank this past Monday, and they weren't able to do so. The individuals had to change
LOC, letter of credit.
That this was non-existent. They never issued it. They don't have the authority to issue it there, etc. So obviously that sends dramatic red flags, considering Vesttoo doesn't have the cash capital to securitize these ILS investments. So they get a bank to issue a letter of credit, the LOC, and these LOCs are non-existent to the tune of, it could be one or it could be up to $4 billion in premium. So it can be a dramatic downfall for them.
And the ILS, it's insurance-linked securities. Now, who are the players? So we mentioned Vesttoo, Corinthian Group. Let's put aside the bank who allegedly or did not signed on that letter of credit. Who are Vesttoo and the Corinthian Group?
So obviously Vesttoo is an ILS marketplace. It's for insurance-linked securities for investors to invest in reinsurance. They created this marketplace for all these investments to come through, and then those investments are expected to be securitized by cash or letter of credit. Vesttoo didn't have the financial wherewithal to be able to cash these or create or have a cash reserve to do this. So they teamed up with Corinthian Re, or the Corinthian Group, and within the Corinthian Group, Corinthian Re, and they created a Bermuda holding company. So you have Vesttoo Bermudan Bay as the note issuer to the investors, to the ILS investors. And then through that, they created a Vescor LLC, which has an operating agreement with Osprey Re, which is owned by Corinthian. And then through that, they created Osprey Re Vescor IPC, which is a captive that can issue segregated cells or protected cells. So through that, a lot of different players involved, but the main two parties are Vesttoo and Corinthian Re.
Only on the part of the Corinthian, before we go back to Vesttoo and understand better how that marketplace works and ALSs for CAT or non-CAT ILSs. And this is something classic that you have decades of experience in, right? You have a reinsurance group. Basically, they have a few reinsurance entities, one in the Cayman, one in Bermuda. They have a holding company. There are other captives. There are the sales. Why do companies have all of that stuff, or what's the benefit of having it? Because it sounds very complicated structure to provide risk management or collaterals for risk and insurance. Can you give us a little bit light on that?
Absolutely. So in order for a company to be able to, a company like Vesttoo to be able to take risk in something, they have to have an insurance vehicle. Either they have to have a reinsurance company and collateralize that, which they don't have the financial wherewithal to do that. They have to have an insurance company, which they're not selling an insurance product, so they wouldn't have that. Or you can have a captive, and under a captive, you can form a carrier side, which you could sell directly policies to consumers, or you can create a reinsurance captive. In this case, they created a reinsurance captive with Corinthian out of Georgia. And that's so they could share in the risk that they're taking.
You have new programs they want to sell. Who's on the other side? So one side you have the ILS. What's on the other side of their platform?
So Vesttoo created an ILS marketplace, and within that ILS marketplace, they also have AI technology to predict how each respective portfolio is going to trend and is going to be profitable. They needed to have an insurance underwriting side and a management side to that. So that's where Corinthian Re steps in. So Corinthian Re is the underwriter and manager for that portfolio book. So they're acting as a reinsurer. When a program is launched by a startup, they get a fronting company or a fronting insurance carrier to provide paper and capacity, and then the difference between what the carrier wants to take, let's say they want to take 10% risk on it, they have to cede off the 90% balance to a reinsurer. And that's where Corinthian Re and Vesttoo would sit on the back end. Most fronting companies charge between 3 to 7% as a front fee. And then most fronting companies, I would say all of them except one, take a quota share percentage of risk or an XOL layer participation, which is excess of loss participation, which is above the quota share. So it's super interesting how these companies are formulated and how they work. Please jump in and we'll have this.
Oh no! I have more questions because basically, listen, when I'm looking at the industry, and I will call it the rise of InsurTechs and InsurTech MGAs, which basically said we're going to keep it small, we're going to build a program, we're going to be an MGA or an MGU, and they basically said, oh, we actually need fronting companies and we need capacity, right? And with that, so everything is going together at the same time. And when we are looking at the fronting industry, the fronting and insurance industry, it started to boom or to increase since 2014 or 2015, more or less in parallel with the increase of InsurTech startups, right? So until now we had State National. They were like the big players. And please, you can correct me wrong, because when I look at a fronting company, it's perfect, right? It's only a balance sheet play. You just take your fee, 5%, or as you said, 3 to 7%. And the rest of it, it's all about managing risk, right? You're going to take that, pass it to the reinsurance. So
Yeah, fronting companies have been around, God, since the late 60s. So a form of them have been around, just like captives have been around since the late 50s, early 60s. So if you look at how these alternative risk transfer vehicles were created, and they were created to help in a hard market where there wasn't a lot of competition, rates were high, and individuals wanted to create programs because they saw the benefit and the profitability behind them, and that they couldn't get through a traditional marketplace. So that's where these vehicles come from. Through the advent of InsurTech, and in the past 10 years, they have been more prevalent, and there's been more players that have come into play on the fronting space outside of State National. State National is just a pure front. They don't take any risk. They don't take any credit risk. They don't take anything. They just provide you paper. You pay a nice fee, and they move on to the next program. All these other hybrid fronting companies, they'll take quota share risk. They'll take a 10%, 20% risk on a program if they believe in the program, and then cede off the balance to reinsurers. They're taking a lot of credit risk, and they're taking a lot of pure risk on that, depending on the program and depending on the line of business, obviously. So
go ahead. So I'm sure that they need to balance it, and they will do it with reinsurance based on relationship and, of course, using the different brokers, or they will go to Vesttoo. Is there anyone else who is competing with Vesttoo besides, let's call it, the incumbent solution? Or who are the incumbent solutions?
I mean, I'm sure there are players playing in the ILS space. I don't know if they had the marketplace and the technology that Vesttoo had. I'm not going to be naming them because I don't want to, throw any names out there. But there are players out there. I think the creative part that Vesttoo did was create more of a baby reinsurance captive sidecar vehicle for the masses, which is interesting. It's nothing innovative, but it's creative in what they did, which is great. And they're using technology that seems apparently is it's predictive and it's amazing, and the AI is good. So it is what it is. Going back to the core issue with this, it's when you have companies that are growing so quickly and raising so much money and bringing in so much funds from different PEs and VCs and ILS markets, et cetera. And you grow from 2018 from 0 to 2023 at $4 billion in your marketplace. That's a dramatic increase for any company to grow that quickly in such a small amount of time. I mean, 6 years, 5 to 6 years, and you have 4 billion in premiums that you're holding and reinsurance premiums. That's a lot of growth right there. There needs to be the right security behind your processes to make sure that you have all your ducks lined up in a row, and if one domino falls, they're not all going to fall. You're gonna create little walls through that to stop it.
And this is what happened here, right? And this is what happened
Absolutely.
here. There is a domino that fell, and it fell, and now we hopefully will actually know, or allegedly a domino fell. And then it's a question, did they have or do they have the processes in place to make sure that everything passes some sort of a sniff test or a snuff test and some sort of a due diligence before that credit gets into the marketplace?
Yeah, well, and everything goes back to due diligence, right? You have to look at how companies do the financial due diligence in a company. They look at financials, they look at expense reports, they look at technology, they make sure the technology isn't ripped off from someone else, and they're doing their due diligence on whatever player they're working with. But do they really do a deep regulatory due diligence to make sure that there's panels involved? You have panels for reinsurance. Make sure that you meet with your reinsurance partners and your carrier partners and your distributor partners, and make sure everyone gets to know each other and that we're all in the same boat and we're all aiming for the same goal of writing premium and being profitable. Why was there a lack of a financial banking panel with this, where you would meet with your bankers, a couple individuals, 2-3 individuals from the bank on the C level, bring in your reinsurance partners, talk about the LOCs, talk about how do we expand these LOCs, if we need to expand them, and how do we call on them, etc. That wasn't done apparently. When you have an investor
Allegedly,
going to a
they
bank,
didn't have it. Yeah.
I mean, when an individual goes to a bank to collect on an LOC and they say sorry.
In all of these things, what's the role of Indemnity Lab? Do you guys help with due diligence or only help, identifying and working with a PE's portfolio company?
So for us, we won't do the due diligence yet. What we're focusing on right now are working with VCs. We work on their portfolio companies that are Series B or later. And with PEs, we work on their portfolio companies that are Series C or later. So these are established players that have established programs. They've been vetted to a certain degree, but then you can say, Vesttoo was during their Series D round, which they had to halt based on this. So, we'll come in, we'll analyze each contract that they have. We'll look at the reinsurance structure, for example. We'll look at how much they're paying for reinsurance. We'll see if they have a slide on reinsurance and if it's going to benefit them based on their loss ratio. Then we'll make recommendations, for example, on reinsurance. We'll look at claims, we'll look at underwriting, we'll look at, within underwriting, we'll look at their filings, we'll look at their operations, we'll look at, their competitive advantage, we'll look at true TAM. Do they say, oh, we're writing work comp nationally? Okay, that's fantastic, but are you focused on a specific line of business? What is your true TAM? A lot of these players say that their TAMs are gigantic, but they're truly not gigantic because they're hyper-focused on a respective industry. So truly looking at the organization and helping them guide that strategy aggressively to be highly profitable. Claims. Every one of these companies, you look at, your famous renters, InsurTech, that pays a claim out in 2 seconds. Is there diligence
with a
in that?
synthetic agent?
Oh yes, with the synthetic agents and with their non-renewed clients that they're calling alumni, which is genius marketing, by the way.
Oh, listen, they are number one in marketing. I salute them twice just for the brilliance of marketing, from release the pink to I don't know, everything else. There was once upon a time there was a joke. You want to submit a claim, you press the button claim, the AI basically triggers a bot that counts from up to 3 seconds, and then claim approved. But
Yeah.
those are jokes.
Oh no,
So
it's hilarious, man. If you look at the synthetic agent, that's just genius. Yeah, we're going to be paying a
it is.
16%. We're going to be paying 16% interest. How can we flip this to make everyone feel more comfortable? Oh, we're going to call it a synthetic agent. We're paying a commission now. Okay, it's still the same. You're rubbing the same crap everywhere. It's just calling it a different name.
And that's the brilliance of it.
It is. When I see a company have a 270%, 277% combined ratio, that makes me angry because it makes me look like a fool in this industry. If I can help that company change that and lower that combined ratio to be below 1.0, that's my goal. And that's my goal for the company. I'm an industry veteran. I've been doing this for 33 years. I'm here to help the industry. Every strategist that is under Indemnity Lab, they love this industry and they want to help it be better. For us, it's riding the ships, making sure that we pass on the knowledge that we have to make sure these companies are successful. We can't do that in a year. We can do that in 3 years on a per company basis, and then we'll let them go, just like a child. We'll help them mature, and then we let them go on their own.
I'm okay, but the PE and the VC, they are the actual paying customer that
Correct.
want to help, want to improve their portfolio company, want to do all that stuff. Gotcha.
That's who we want to work with.
Right. So if we are going to, well, we sort of tied that loop with the Vesttoo. So let's finish with that one. So my last question will be, it's like, okay, bringing out your crystal ball or just experience, what do you think will happen next in the next chapters of this interesting story?
I hope it doesn't happen because I think it's going to tarnish the ILS marketplace. But it may need to. I believe there's going to be criminal charges brought upon individuals within the respective marketplace organization because they're the ultimate ones that are involved and the ultimate ones that probably created this if there was any fraud. But I think regulators are going to have to step in and be a little more diligent in what they're doing. Investors are going to have to do a deeper diligence than what they've done. And it's going to help the industry grow and move forward. It's going to hurt a couple individuals, unfortunately, but from that, it's going to be a learning lesson. And hopefully from every learning lesson, we move and grow from that. So with that being said, I'm going to try to keep a positive spin on it.
Yeah, well, I hope that it will not reach criminal. Was there some sort of an impact? Was someone, maybe there will be punitives, but
they discovered that because one of the investors was trying to collect on a letter of credit with the Chinese construction bank. When they couldn't, they went I believe they went directly to the board of Vesttoo to find out what's going on. So from there, that created this audit procedure to start looking at every LOC and see which ones are viable and which ones aren't. There's a lot of carriers that are involved, and there's a lot of reinsurance companies that are involved. Ultimately, even if Vesttoo is to blame, the individual reinsurers and carriers will be responsible for this, for the financial loss, if there's any.
So who is going to be impacted? Because we've seen, I think that, who was it? Maybe Insurance Insider pointed out that root insurance may be impacted by it, and other MGA programs because they have some sort of an agreement through Vesttoo.
Well, I mean,
what does it?
Yeah, I mean, and there's a lot of companies that are impacted right now. I mean, there was an insurance carrier who partnered very closely with Vesttoo, and they were in the process of selling, and they had to halt that sale until the more due diligence is done on that. Vesttoo was raising their Series D. They couldn't raise their Series D because of this.
Yeah, but that's something, this is a setback. This is not but I'm sorry, by impact, I'm talking about actual loss, which means, well, even a delay in sale is a loss. So I'll be careful with that. It's more about, was there a policy holder that lost his coverage, or a company, or will that was there a cascade or a waterfall all the way to the policyholders?
As far as I know, not yet, because that news hasn't been brought about. Ultimately, whatever carrier writes a policy is ultimately responsible financially for that policy, whether they have reinsurance or not. Now, remember, this is a reinsurance contract through an ILS marketplace. The writing carrier, whether it's a fronting carrier or a traditional carrier that wrote the policy, is ultimately going to be liable for this. Now, whether they can recuperate anything reciprocally from reinsurers is a different thing. They're the ones, the buck stops with them, and they need to pay, period. So this can cause some reserving issues for some of these carriers, and they'll have to either have additional capacity brought in, or they'll have to get rid of the program, or they'll have to move. But as things are said, I mean, carriers collect premiums. Those premiums act to pay claims. When those premium reserves are lower than the claims that are coming in, then that's when the reinsurance steps in, and it depends on the line of business. So there's a lot of factors that come into play, but ultimately the responsible party will be the carrier.
And that will be for the policyholders. So basically, yes, we have a few responsibilities here. And I know that we already tried to finish this episode, but it's very interesting because this is basically the meat. This is the drama, right? Who is responsible, who is liable, and for what? And at this point, we are just guessing and estimating on all kinds of imaginary scenarios. So we have the marketplace, which will be under the regulation and the financial, and making sure that there were processes with the right supervisor to make sure that there is the credit and everything has the right collateral, and the different committees, etc. You have on the side of the insurance policy the carrier that is the ultimate stop. It's going to be interesting.
We haven't launched yet. We will be launching at ITC this year. So we are currently working with some PE and VC partners that are very interested in doing business, but we're not doing any work until after ITC. The panel has been selected. We're bringing other partnerships into this. We're building the infrastructure behind it and the technology stack so we can have the correct launch when we do.
So people who are going to attend ITC and would like to participate in your whiskey tasting event, how should they reach out to you?
Send me an email. Look me up on LinkedIn. Send me a private message. Would love to chat with you. Would love to get to know you. Would love to have some whiskey or bourbon with you. Hopefully you'll be able to join us, Gilad. I'm sure you will. We'll have some of the panel members there, some of the strategists, so you can meet some of the strategists. So PEs, VCs, please come out, reach out. Let's chat.
Fantastic. Emilio, thank you very much for joining me on this beautiful Sunday afternoon while keeping you away from Comic-Con as your teen kids really want to go and see what's going on in San Diego, which is like what, 5? You live in San Diego or like 5 minutes away from San Diego?
I live about 5 minutes away from downtown San Diego, 10 minutes away from downtown San Diego. Amazing. I'm in Point Loma.
Beautiful. So beautiful. Anyway, Emilio, thank you very much.
My friend, thank you.
We'll keep tabs on what's going on the news, and maybe we'll have another episode about that.
Let's follow up.
Let's follow up. Cheers.
Have a good Sunday. Cheers. Thank you, everyone.